Happy New Year from Golden Rule Radio. What a difference a year makes and what a difference a month makes. But today we're going to start the show with recapping what has happened in 2017.
Well, it was really a solid year. The way that gold and the precious metals finished 2017 is encouraging. Gold actually finished up 13% at 1303.35, and it closed for 7 straight sessions in the positive. So it did surpass a key resistance level that we had pointed out. And silver had a 6% gain in 2017. Granted, a lot of volatility. We saw a high of 1852 with a low of 1557 during 2017. But all in all, it finished at 1693. With that 16% volatility to finish up 6 is a welcome sign. And we saw a lot of that with palladium as well. It was the big winner on the year, outperforming essentially every major market by closing at 1,064. Which is a whopping 55% gain and a 17-year high. So as far as the white metals went, we can't forget what palladium did in driving that platinum-palladium ratio. And we'll get into the dollar here in a little bit later in the show.
I think that's a good recap, but how many people actually know that gold closed up this year or silver closed up this year? The metals market has been in a downward trend since the 2011-2012 timeframe, down into 2015, December 2015, with gold being the bottom. Since then, we've been quietly moving higher, just kind of stair-stepping, building a base. I think it's all been constructive technically, and I think there are a lot of fundamentals on the horizon that'll drive gold higher. I think this year will be good for gold, but how many people actually know that? It seems like the attention is on all these other things going on in the world, on all other markets. The cryptocurrencies were big this last year. And so who knows? Gold has a good year this year. It's going to have another good year this next year. And, the attention is going to be drawn to it. I think this last 8 days of closing higher has been, in the news. But, people just don't seem to, in America anyway, be tuned into that. It seems like everything else is noise that's distracting them from it. But here we are, gold's closing higher and moving significantly higher going into the first of this year.
Robert, it brings us back to, say, like 2001, 2002.
I agree.
When we're coming off of the tech boom, and gold silently had put 2 years of good growth in before really the market started paying attention. We saw the same thing happen in like 07, 08. Before the stock market crashed, gold had already started climbing. In fact, gold went up to about 1,050 before it went to 1,900. We had a $300 or $400 rise in gold before anybody started paying attention. We've had another $300 rise in gold before the general public starts paying attention. So you see these silent moves show up as markets cycle, to where the first couple years, the first couple stages in a market cycle tend to be the most profitable long term because most people miss them. And this takes us back to our December 7th show, where we were talking about the fib levels and a number of technical indicators. And we're not crazy. We understand that technical analysis in markets is difficult, that we can't get it right all the time, but we do try to do our best to be as accurate as possible as we're going through these numbers. So I think our calls back on December 7th ended up ringing true, because we saw our market bottom just a couple days later.
Well, I'll say that too. I mean, I appreciate your humility, but I can say from an outsider, honestly, it's uncanny how accurate you guys really were in 2017. I say you guys because the technical credit really belongs to Robert and Miles on this show. And that December 7th call is absolutely validation of why it is important to touch on the technicals. We get a lot of flack, from comments in our show, I think, that we focus too much on technicals, that you can't trust them in a manipulated market. I disagree. We have history of a 2017 show where you guys nailed it time and time again. Technicals aside, fundamentals are critically important as well to focus on, and we're going to continue to do that. We'll touch on some 2018 fundamentals at the end of the show.
All right, so let's talk about current price action. The last 8 days on gold has been up, and where do we go from here? I'm really interested to see where we go from here before I'll let you guys run with this, because I think you're at these crucial points with the dollar index. The dollar index being down right at a critical level where if it breaks lower and breaks that previous low, you might be resuming the water side. However, it might be to where we're going to have a bounce here with the dollar, which might cool off gold and silver. But since our December 7th show where we told you this was the opportunity, silver's up 9% and gold's up 6%. So where do we go from here?
Well, let's start with the dollar then, Robert, just because you brought that up. The U.S. dollar peaked last year at 103.82, but we saw obviously sharp declines as the year progressed, and the president wanted a weaker dollar. He got it. The dollar index fell to as low as 91.01 and closed down 11% on the year. So that does beg the question. If the dollar's down 11% last year, gold's up 13%, that's gold doing its job as a currency hedge. Where do you show things going, Miles?
Well, and the dollar's still inching down today, Wednesday, that we're recording, still sitting, I believe, just under 92. We've got fib levels and some other fundamental levels down sub 90 in the 88.5 to 89 range. Given the patterns that we saw last week, I mentioned the Quasimodo head and shoulders pattern, which should indicate some down movement. Personally, I think we're down another point or two, and then we'll just have to readdress. Do we get a bounce before it continues? Well, and we had the same point a couple weeks ago transitioning over to gold when we got down to the fib level sub 1240. And then we came back up to 1263, and I kept saying, you know, if we hold 1263, we could see a better entry point, and we could see it push lower. Lo and behold, it blew right through it. So we could see the dollar come down to that sub 90 level. We could see the dollar blow right through that sub 90 level. And I think because of some of the fundamental reasons that we are going to mention here in a minute, I don't see the dollar getting stronger anytime in the near future, or maybe even the long future.
Well, we know over time that is the design. The dollar isn't going to get stronger, even if it's relatively stronger versus those other currencies, especially faltering against the yen and the euro last year. I'm with you. I don't see it getting stronger. So I'm going to put you on the spot a little bit. Can you give us some new clear lines of support and resistance?
Well, 1310 holds, then I think we're looking about mid 1340s.
Thanks.
With gold pushing up into the 1300s, I wouldn't be surprised to actually see it pull back into the high 1200s very, very briefly. I don't know that it's going to do that, but maybe just from a trading standpoint, it might do that. But we're into the 1300s, clearly. And I think the previous high on gold is around 1375. Once it breaches that and moves higher, I think we have a ceiling somewhere around 1430, I think, technically speaking.
Well, and if we follow pattern that we have the last couple years, I agree. I think mid 1400s is a good place to end the year just in a normal trading year. And that makes the assumption that the equity market stays strong, that the dollar doesn't collapse, that we don't have some other type of crisis that ends up kicking things off.
For gold, any weakness here in January, any weakness, I'd be buying, because we're in that pattern that we've been talking about on this show the last year. We're there. And I think in the next few months, we're going to continue to see higher prices. So any weakness that we see here is an opportunity.
Whether you're talking about 1310 or 1295, right? You're saying any pullback type situation is an opportunity to step back in, or we go to the 1374, it's resistance, and we come back down to 1340. You're saying that's a sign of weakness, step in.
Yes, I think that's correct, Tori, because I think we did have a little bit of a pullback in January last year, and that's when we said that was your opportunity. At that point where it pulled back in January, we have not seen those prices again. We're higher. We're going to continue to go higher. So any weakness here is a buying opportunity.
And that's true of the December, January bottoms the previous year as well. So moving over to silver, silver also coming off of some correction levels has taken a pretty big jump up the last couple days. We're sitting right at a 618 fib, right below it. And silver really hasn't put in some new highs yet. So we'll have to see how silver responds as gold and the other metals continue up. We still think that silver is one of the big opportunities in the precious metals right now, along with platinum.
You have to remain patient and listen to us in this regard. Guys, we have been talking about silver's potential strength because of its current relative value all of 2017. It underperformed gold. It widened the gold-silver ratio. Doesn't change a thing. Call me the fundamental guy, but I am looking at silver as needing true inflation. So let's transition from technical to fundamental for the rest of the show here. Silver needs inflationary pressures, does it not? To me, it is a barometer of economic viability and true inflation hitting Main Street. We're seeing some of that in palladium for different reasons. But platinum and silver are going to take off when you get some changing fundamentals, which are going to include what?
Well, let's just look at 2018 and what we've got on the table at this point. I mean, we just had a massive tax cut bill pass. So we are going to be looking at more income in our pockets, but quite a bit less income in the government pockets. So the question is the government going to drop spending? I strongly doubt it because of the next thing Trump's going to work on, which is infrastructure spending. So we're probably looking at a step up in government spending while they're decreasing their income. So granted, it means an extra couple $1,000s in each of our pockets, but at what expense? What does our cost of living go to at that point?
What does our debt do? Right.
Exactly. Last time I checked, if I increase my spending and decrease my income, I don't get to pay my mortgage. But somehow the government gets away with it because of its fundamental ability to tinker with the value of the U.S. dollar.
Well, and in 2018, we can't expect any more oversight or healthy controlling of the government spending by the Federal Reserve. They only have so much power. We do have a change in power at the Federal Reserve coming in February with Powell taking the place of Janet Yellen, and that's going to be pretty insignificant in my opinion. That I don't really see a whole lot changing, and I would include truly holding the government accountable. They have been crying for a couple of years now about how the government needs to rein in its spending in order for the Federal Reserve to truly have economic impact.
So we have a president who is not afraid to spend and has already said he's fine with a weaker U.S. dollar long term. And we've got a new Fed chairman stepping in that, at least in this room, we don't believe is going to change anything. Now, on top of that, we've had 4 interest rate rises in the last 13 months. So granted, we've gone from 0.75 to 1.5 as far as the Fed funds rate goes, which is still pretty low. But what happens if 1.5 by this time next year is 3, 3.5, 4? Then you get to the point where you've got substantially more owed on the new debt that they're taking out, on top of all the previous debt that they've been writing for so many years at this point anyway. So you've got interest rate rises, you've got a non-changing Federal Reserve, you've got substantially increased expenses and spending from the federal government. All of this equates to a weaker U.S. dollar. So we'll probably continue to see the U.S. dollar decline long term, or certainly at least over this next year. I wouldn't be surprised to see the stock market continue to rise because of that, as people are chasing returns. But eventually, once those interest rates reach a point, people are going to start looking at the bond market again, which ends up being very bad for the equities because you can get fixed income returns at 3, 4, 5, 6%. So bad for the equities, the dollar's continuing to drop, gold's continuing to rise. Things are not going to look peachy keen, I think, for a number of years here.
Well, we really do appreciate you listening to this program, watching this YouTube channel, and I'm genuinely excited about 2018, not just from the show standpoint, but from the precious metals and related markets. Appreciate you guys, and here we go. Let's start off a new year.
You can follow us on Twitter at ICA Gold or click the subscribe button below this video. Thanks for listening. Happy New Year.
And have a good week.